Breaking. The silver market just witnessed something that hasn't happened in decades, and if you're not paying attention, you're about to miss the biggest wealth transfer opportunity of 2026. The vaults are empty. I'm not talking about a small drawdown. We just shattered the 100 million ounce threshold, and the implications are absolutely staggering. Major silver depositories across North America are reporting inventory levels that experts are calling dangerously low. This isn't fear-mongering. This is hard data that Wall Street doesn't want you to see. Here's what's actually happening. Industrial demand is skyrocketing. Solar panels, electric vehicles, and electronics are consuming silver at unprecedented rates. Meanwhile, mining production can't keep up. And now, the physical supply that's been sitting in vaults, the safety net that's kept prices stable for years, just evaporated. When JP Morgan started hoarding silver, people called them crazy. When the big banks began moving physical metal, the mainstream media stayed silent. But now that we've crossed this critical threshold, the smart money is scrambling, and retail investors are finally starting to wake up. This could be the last warning before silver prices explode. The question is not if this market moves, it's whether you'll be positioned before it does. If this information just changed your perspective on silver, smash that like button right now, because what I'm about to show you in the next few minutes could be the most important investment insight you see all year. The vaults are empty. I'm not talking about a small drawdown. We just shattered the 100 million ounce threshold, and the implications are absolutely staggering. Major silver depositories across North America are reporting inventory levels that experts are calling dangerously low. This isn't fear-mongering. This is hard data that Wall Street doesn't want you to see. Here's what's actually happening. Industrial demand is skyrocketing. Solar panels, electric vehicles, and electronics are consuming silver at unprecedented rates. Meanwhile, mining production can't keep up. And now, the physical supply that's been sitting in vaults, the safety net that's kept prices stable for years, just evaporated. When JP Morgan started hoarding silver, people called them crazy. When the big banks began moving physical metal, the mainstream media stayed silent. But now that we've crossed this critical threshold, the smart money is scrambling, and retail investors are finally starting to wake up. This could be the last warning before silver prices explode. The question is not if this market moves, it's whether you'll be positioned before it does. If this information just changed your perspective on silver, smash that like button right now, because what I'm about to show you in the next few minutes could be the most important investment insight you see all year. Let me paint you the full picture of what's really going on here, because this story goes deeper than just numbers on a screen. We're talking about a fundamental shift in the global silver market that's been building for years, and we've just hit the tipping point that everyone said would never come. For decades, the silver vaults have been the backbone of price stability in this market. When demand spiked, the vaults would release inventory. When demand dropped, they'd accumulate. It was a beautiful balancing act that kept prices relatively predictable and gave traders a sense of security. But that security was always an illusion, and now the illusion is shattered. The Comex vaults, which are the primary depositories for silver in the United States, have been bleeding metal for months now. We're not talking about normal fluctuations here. This is a systematic drainage that's been accelerating at an alarming rate. And when I say we've crossed the 100 million ounce threshold, I mean we've dropped below levels that haven't been seen since the early 2000s. Think about that for a second. Back then, the world didn't have the same industrial appetite for silver that we have today. We didn't have millions of electric vehicles hitting the roads every year. We didn't have the massive solar panel build out that's happening across the globe. We didn't have the electronics revolution that puts silver in everything from smartphones to medical devices. So what happens when you have dramatically higher demand and dramatically lower supply at the same time? Well, according to every economic principle ever written, prices have to rise. It's not a question of if, it's a question of when and by how much. And based on what we're seeing right now, that moment might be closer than most people think. Let me break down the demand side for you, because this is where things get really interesting. The green energy revolution isn't some distant future event anymore. It's happening right now, and silver is at the absolute center of it. Every single solar panel requires silver paste for its photovoltaic cells. There's no substitute that works as well. Scientists have been trying for years to find an alternative, but nothing matches silver's conductivity and efficiency. And we're not talking about small amounts here. The average solar panel uses about 20 grams of silver. Now multiply that by the hundreds of millions of panels being installed every single year, and you start to see the scale of what we're dealing with. The Biden administration's Inflation Reduction Act turbocharged solar installations across America. Europe is racing to reduce dependence on Russian energy. China is building solar farms the size of small countries. India has massive renewable energy targets. Every major economy in the world is pushing hard into solar, and they all need silver to make it happen. This isn't speculative demand that might materialize someday. These are contracts being signed right now, factories running at full capacity, and installation crews working overtime to meet targets. And then you've got the electric vehicle revolution, which is another massive silver consumer that most people don't even think about. Every EV uses significantly more silver than a traditional combustion engine vehicle. We're talking about contacts, switches, circuit boards, and battery systems that all require silver's unique properties. As the world transitions away from gas guzzlers, silver demand from the automotive sector is exploding. Major automakers aren't just testing EVs anymore. They're betting their entire futures on electric. Ford, GM, Volkswagen, Toyota, every major manufacturer has announced plans to go heavily electric or fully electric within the next decade. That's not rhetoric. That's billions of dollars in committed capital that's going to need millions of ounces of silver. But it doesn't stop there. The electronics industry has been a steady consumer of silver for years, but now we're entering a new phase with 5G infrastructure, artificial intelligence computing, and the Internet of Things. Every single one of these technologies is silver intensive. The servers running AI models use silver in their components. The 5G towers being erected across the country need silver. Smart home devices, industrial sensors, medical equipment, the list goes on and on. We're living through a technological transformation that has silver woven into its very fabric. Now let's talk about the supply side, because this is where the story gets even more compelling. Silver mining isn't like turning on a faucet. You can't just decide you want more silver and have it appear. Mining projects take years to develop, require massive capital investment, and depend on finding economically viable deposits. And here's the kicker. Most silver doesn't even come from primary silver mines. About 70% of silver production is actually a byproduct of mining other metals like copper, lead, and zinc. So silver supply is somewhat tied to the economics and production levels of these other metals. What we've seen over the past few years is mining production struggling to keep pace with demand. Some of the world's largest silver producing regions are seeing output decline. Mexico, which is the world's largest silver producer, has faced regulatory challenges and production issues. Peru has dealt with social unrest and operational difficulties. These aren't temporary blips. These are structural challenges that take time and money to resolve. And while demand has been growing at a steady clip, supply has basically flatlined. The deficit between supply and demand has been growing for several years now. Industry analysts have been tracking this, and the numbers are stark. We're talking about a structural deficit of over 200 million ounces annually. Now, you might be wondering how the market has functioned with such a massive deficit, and that's where the vaults come in. For years, the vaults have been filling the gap. When industrial users needed silver and mines couldn't provide enough, the vaults would release inventory. It worked beautifully until it didn't. And now we're at the point where it doesn't work anymore. The vaults are running dry. The buffer is gone. The safety net has disappeared. When the next surge in demand hits, where's the silver going to come from? The mines are already running at capacity. There's no strategic reserve waiting to flood the market. The vaults that once held hundreds of millions of ounces are down to levels that would have been considered crisis territory just a few years ago. Let me tell you about something that happened recently that really drives this home. A major industrial user of silver recently went to the market to secure their supply for the next quarter. This is a company that's been buying silver for decades. They know the market inside and out, and for the first time in their history, they couldn't get the quantity they needed at the price they expected. They had to pay a significant premium and still didn't get their full order filled. That's not supposed to happen in a market with adequate supply. That's the kind of thing that happens when scarcity becomes real. Now, I know some of you are thinking about the manipulation theories that have floated around the silver market for years. And look, I'm not here to dive deep into conspiracy theories, but I will say this. The dynamics are changing in ways that make any past manipulation much harder to maintain. When physical metal is actually scarce, when vaults are running low, when industrial users are competing for supply, the paper markets can only diverge from physical reality for so long. Eventually, the fundamentals win out, and We're also seeing some really interesting behavioral changes from the big players in this market. The commercial banks that have historically been short silver are starting to reduce their positions. Some are even flipping to the long side. Now, these institutions have access to information and analysis that most retail traders could only dream of. When you see a major shift in positioning from the smart money, you need to pay attention. They're not making these moves on a whim. They're responding to data and trends that tell them something significant is changing. And then there's the investment demand side of the equation, which has been relatively quiet but is starting to wake up. During the pandemic, we saw a surge of retail interest in precious metals. People were worried about inflation, currency debasement, and economic uncertainty. Silver flew to nearly $30 an ounce before pulling back. But that was really just a preview. The conditions today are actually more favorable for silver than they were back then. Inflation is still running above the Federal Reserve's targets despite their aggressive rate hiking campaign. The national debt is ballooning at an unsustainable pace. Geopolitical tensions are elevated across multiple regions. The traditional safe haven assets like gold are already at or near all-time highs. And silver, which historically tracks gold but with more volatility, is sitting at a price level that looks incredibly cheap relative to the gold to silver ratio. Speaking of that ratio, let me give you some historical context. Throughout most of human history, the gold to silver ratio was around 15 to 1. That means 15 ounces of silver were worth 1 ounce of gold. In modern times, that ratio has expanded significantly. Right now, we're sitting somewhere around 80 to 1, depending on the day. That means you need 80 ounces of silver to buy 1 ounce of gold. From a historical perspective, that's wildly out of whack. Even if you just look at the industrial fundamentals and ignore the monetary history, silver looks undervalued relative to gold. So what happens when investment demand starts to really flow into silver? We've already seen what a relatively small surge can do to the price. Imagine what happens when pension funds, sovereign wealth funds, and institutional investors start allocating even a small percentage of their portfolios to physical silver. The market for physical silver is actually pretty small in dollar terms compared to other asset classes. It wouldn't take massive capital flows to move the price significantly. And here's something else to consider. The younger generation of investors is showing a different attitude toward precious metals than previous generations. They're not just buying paper ETFs, they're interested in physical ownership. The growth in retail bullion sales has been remarkable. Websites selling silver coins and bars are doing record business. People want to hold the metal themselves. They want it outside the banking system. This is a trend that's been building steadily and shows no signs of slowing down. The meme stock phenomenon also showed us something important about retail investor power. When a large group of individual investors decides to move in the same direction, they can create massive price movements. We saw it with GameStop, AMC, and others. The silver squeeze movement that happened a couple of years ago was a glimpse of what's possible, but it happened at a time when vault inventories were still relatively healthy. Imagine what happens now with inventories at these critically low levels. Let's talk about what this means practically for the market going forward. When you have tight supply and growing demand, you get price spikes and volatility. Silver has always been more volatile than gold, and in a supply-constrained environment, that volatility is likely to increase. We could see days where silver moves 5 or 10% in a single session. We could see the kind of explosive upward moves that bring in momentum traders and create self-reinforcing rallies. The mining stocks are another angle worth considering. When silver prices rise, silver mining companies see their profit margins expand dramatically. Unlike the physical metal, mining stocks offer leverage to the silver price. A 20% move in silver might translate to a 50 or 100% move in a well-positioned mining stock. Of course, that works both ways, but in a bull market for silver, the miners can be incredibly lucrative. There are also geopolitical considerations that most people aren't thinking about. Silver is strategically important for national security and technological advancement. Countries are starting to think about securing supply chains for critical materials. We've seen this with rare earth elements and other strategic metals. Silver could easily become part of that conversation. If major economies start building strategic reserves or implementing export restrictions, the global market dynamics could shift very quickly. The industrial users are in a tough spot right now. They need silver to manufacture their products, but they also don't want to accumulate too much inventory and tie up capital. It's a delicate balancing act, but as supplies get tighter, we're likely to see more companies moving to secure longer-term supply contracts and willing to pay higher prices for that security. That puts a floor under prices and reduces the available supply for investment and other uses. One thing I want to emphasize is that this is not about short-term trading or trying to time the perfect entry point. The structural story for silver is playing out over months and years, not days and weeks. Yes, there will be volatility. Yes, there will be pullbacks, but the underlying fundamentals of declining inventories, growing industrial demand, and limited supply growth create a compelling long-term thesis. We're at a unique moment in the silver market. The inventory drawdown we're seeing isn't something that can be reversed quickly. Even if prices rise and incentivize more production, it takes years to bring new mines online. Even if recycling increases, it won't be enough to fill the gap. The vaults that have been drawn down to these critically low levels won't be replenished overnight. We're looking at a multi-year process of rebalancing supply and demand, and that process is likely to involve significantly higher prices. The smart money understands this. That's why we're seeing quiet accumulation from sophisticated investors. They're not waiting for confirmation from CNBC or mainstream media coverage. They're acting on the data that's available right now. They're looking at the same vault inventories we're discussing. They're tracking the same supply and demand fundamentals, and they're positioning accordingly. For individual investors, the opportunity is still there. Physical silver remains relatively affordable. You can still buy coins and bars without paying massive premiums. Thus, you can still access the market through various investment vehicles, but windows of opportunity don't stay open forever. When the broader market wakes up to what's happening, when the narrative shifts from skepticism to belief, that's when prices can move very quickly. The 100 million ounce threshold that we've just crossed is more than a number. It's a signal. It's a marker that tells us we've entered new territory in this market. The old playbooks don't work anymore. The assumptions about unlimited supply need to be thrown out. We're in a different paradigm now, and investors who recognize that early are the ones who will benefit most. So what should you do with this information? That's ultimately up to you and your own financial situation. But I'll tell you what I'm doing. I'm watching this market very closely. I'm looking at the inventory reports every week. I'm tracking industrial demand trends. I'm monitoring mining production data, and I'm making sure I have exposure to what could be one of the most compelling commodity stories of this decade. The silver vaults have cracked, and that changes everything. Whether you're a seasoned precious metals investor or someone just starting to pay attention, this is a development you cannot ignore. The fundamentals are screaming at us. The data is clear. The opportunity is right in front of us. The only question is whether we're going to act on it or watch from the sidelines as this story unfolds. And trust me, this is one story you're going to want to be part of.